thought it was safe to peek at your 401k again. Market's getting a little softer. Now, maybe it's just an overdue bounce or the summer doldrums. Want to find out what history suggests, and no one better to go to than Bespoke Investment Group, their co-founder, Paul Hickey. Paul, Bespoke posted a tweet noting that the 4% decline through the first 12 trading days of this August make it the 8th worst since 1953. It sounds ominous to me until I read the rest of it. Tell the audience what typically happens next.
Well, so, I mean, the last time we had one this poorly was in August, was in 2011. And the rest of we saw about a 2% gain for the rest of the month and 5% for the rest of the year. What's interesting is when you think about it, just last year, we saw the complete opposite in the first half of August. We saw the market rally 4% through August 16th. And then it tanked in the second half of August and tanked for the finished the year 11% lower. So in a lot of respects, this year has been the complete opposite of last year,
right,
and August being another example. And for bulls, you're just hoping that the opposite trend continues to play out.
Okay.
So, I mean, that's just one anecdotal piece of evidence, but it's been a really horrible month so far. Just as a case in point, breadth has been negative 11 days this month, including today. The only other month with more negative breadth days this year was May, but that was the entire month. We're only halfway through the month at this point.
Yeah, it's been a little tough. Although, put it in proper context, I mean, the NASDAQ 100 had the best 6 months in history, first 6 months, right? Another worry,
exactly,
particularly for someone like me, who's, I'm a good chartist, but not the world's best. 50-day moving average, we know that's a key metric. And a lot of times when I see that violated, I start to immediately look down for the 200-day moving average. But what does history suggest? Because you posted a chart on that really enlightened me.
Yeah, so, I mean, you talk to any technician, they'll tell you a break of the 50-day moving average is an ominous signal. But when you look back at history for the S&P 500, forward returns following, at least, when you've gotten more than 90 days above the 50-day moving average, so an extended streak trading above, like we saw in this current period, when you do break below finally, it hasn't necessarily been a negative signal. Over the next 3 months, the S&P has averaged a gain of 5%. Over the next 6 months, 9%, and over the next year, 10%. All of those returns are well in advance of the historical average return for all 3, 6, and 12-month periods. So, I mean, the key here is when you're in a strong uptrend and then you break the 50-day moving average, you've already seen a partial correction, or you're already into a correction at that point. So, it's telling you what's already happened.
Oh, I love that. Great point. Again, we always learn something. So I got a minute to go. In this environment, then, stock sectors that you like right now.
Yeah, so I mean, we always focus on companies that have been reporting triple plays, and those are companies that are better than expected earnings, better than expected revenues, and better guidance. We've seen a lot of those this earnings season. One in the industrial sector, AIT, the Applied Industrial Technology, they trade about 16 times earnings, below market multiple, below its historical average multiple, and it's benefiting from strong demand from all the industries it serves, as the company noted in its conference call.
Right.
And they're also looking to benefit going forward from onshoring. And they've reported in their last 7 earnings reports 6 triple plays. I think that's almost unheard of. You never see that. So
right.
A company that has that good of an outlook going forward, constantly raising the bar, is a positive.
Well,
one company that hasn't reported a triple play in a while is Best Buy. The stock trades at 12 times earnings, though, and yields 5%. And in our monthly surveys of consumers, we've seen plans to purchase consumer electronics plummet from the start of 2021 through the last few months, but it started to stabilize in the last 3 to 4 months, and it started ticking higher. So I think Best Buy has digested a lot of that pull forward that we saw in COVID.
Thank you so much. I like that idea, getting ahead of the curve for sure. Hey, Paul, thank you very much. Appreciate it.
All right. Thanks, Charles. Have a good one.